Looking at Imperial Logistics, a South African company whose bulk of services are value-added logistics, supply chain management, and route-to-market solutions. The company, through its operations, also involved in various other sectors like chemicals, mining, energy, healthcare, agriculture, and so on. I chose this company as I'm interested in how South African lives it influences through its divisions. Looking at Imperial's share price, it's been on a steady decline, with the only increase happening in 2017 when they acquired Pentagon Motor Holdings for 493 million. But this didn't stop them losing 24% of their share value over 5 years. Their closest rival, Super Group, on the other hand, has managed to increase its share price by 53%. But ratios tell a better story. Looking at the leverage ratio debt levels, it has been on a steady decline from 2016, and it shows that Imperial is actively working to reduce their debt levels. But we can also look at the liquidity ratio, current ratio. And here, it's easy to see that there was a big change from 2017 to 2018, with fears that Imperial will not be able to cover their current liabilities with their current assets. But this is due to the unbundling of Motors Group, which resulted in half the current assets being moved. We can also look at profitability ratios, but we can't look at them alone. We need to compare against another company. And here we'd look at Imperial and Super. Imperial has averaged 4.92% operating margin over the past 3 years, but Super Group, on the other hand, has averaged 7.13%, showing that it's the more profitable company of the two. But one can also look at the return on equity, and surprise, surprise, these two companies both average 14% ROE over the past 3 years, showing that these two are really competitors. But then we can also look at market ratios, like earnings per share. Now, when we look at Imperial in 2018, they had an EPS of 16.37, whereas Super Group had an EPS of 3.32. But this doesn't matter because we both know that Super Group is the more profitable company. And other ratios we can look at is working capital, which is your cash flow. Imperial managed to decrease the number of days it takes to turn stock from 77 to 28, and at the same time increased its payment period from 85 to 123, meaning better cash flow for the organization. The external factors that would influence Imperial's revenue and costs are exchange rate, with 46% of the revenue being international. The labor market, it operates in the transport sector, which is heavily unionized. Imperial is an African company and needs to adhere to South African policies like BBBEE. It being a transport organization, fuel price is highly affected by the oil price. And social factors like how ex-CEO Mark Lamberti had to resign after being deemed racist and sexist. In conclusion, Imperial is a stable organization that I would invest in for the long haul, but for the short while, I would rather invest in Super Group. The ways that we can improve the ROE at Imperial: we can increase the profit margin, we can improve our asset turnover, or we can distribute idle cash, as lower cash in the balance sheet results in a higher ROE. Or we can go to a place that offers lower tax. But either way, there are ways that we can improve the ROE at Imperial. Thank you.